We have a management joining us. So auto ancillaries have seen very strong demand surge because of new launches and higher demand from OEMs. Companies like Lumax Auto Tech have hit fresh 52-week highs. In fact, the stock is up 80% just this year. Now, Lumax Auto Tech manufactures gear shifters, emission systems, 2- and 3-wheeler chassis, and the Lumax Group is the market leader in automotive lighting and gear shifters. Anmol Jain, who's the managing director at Lumax Auto Tech, joins us now to talk about that. Anmol, good morning and thanks for joining us. I want to first start about the order book, because in your Q1 presentation, you mentioned that you have an order book of 600 crores. What is the visibility like in terms of execution? How much of that will flow through in this fiscal itself? And anything in the electric vehicle space that you're looking at?
Good morning, Sonia. Thank you for having me. First and foremost, the order book, you're absolutely right. We have 600 crores of order book, out of which actually we have 450 crores, or almost 75% of that, which is new orders. I would say about close to 30% to 40% would come in this fiscal itself, and the subsequent numbers would flow in FY24 and peak out in FY25. I'm happy to share that almost 50% of this order book is also in the passenger car space, which is a part of our long-term strategy to strengthen that segment, because we've traditionally been more of a two-wheeler player. But as things are looking forward, I think we will expand our passenger car footprint. In terms of electric vehicle, just to answer to that question, most of our products are actually EV agnostic. The gear shift levers, the telematics, the mechatronics, all of them, we are already in discussions. We are currently supplying the gear shifters to EV makers as well. But we're also in discussions with some of our other products for the future models. But in terms of the current product portfolio, perhaps I would say that maybe about 5% of our revenues is what I'm looking at in the next 2 to 3 years from EV space. But the company is in the process of rolling out an EV critical plan for EV critical components, and we expect to make some announcements later during this year.
Hi, morning, Anmol. Thanks so much for joining in. Nigel on this side. Anmol, for the last few quarters, you've been clocking around 420, 430 crores odd in terms of revenues. So for the year, given that you have been going at this run rate, what should we be looking at in terms of revenues? Should be in that vicinity of around 1,700 crores. And also margins have improved. You're clocking closer around 11% out here, but now input costs have cooled down. What's the broad margin range we should be working with for FY23? Go ahead.
Good morning, Nigel. Sir, absolutely right. We've been clocking about 420, give or take. The last year we closed at about 1,500 crores. We've always traditionally said that this company has surpassed the industry growth rates. And I think I gave this outlook that almost 20 to 30% is the growth we're expecting in this fiscal year on our top line. So give or take anywhere between 17 to 1,800 crores is what I would be envisaging. Obviously, if the current momentum, which is a very strong recovery, which continues, and I don't see any reason why it should not. Like you rightly said, the raw material prices have eased off. I think the hyperinflation, which we were looking at a few months ago, has definitely cooled down. So I think the supply chain volatility does continue. But I do not anticipate any showstoppers in terms of raw material or input cost. And moreover, Lumax has always been able to recover most of the raw material escalations from our OEMs. And if you look at our track record over the last 4 to 5 years, I think we've been consistently able to maintain or improve our contribution margins. So in terms of margin outlook, you're right, we've come close to 11% plus EBITDA levels. I think my outlook has always been to try and garner a 13% EBITDA, as I say, a teen EBITDA percentage. And I think we were moving forward in that right direction.
Anmol, just two questions. You said most products are EV agnostic, which means that you can sell what you produce to EV straight up. You don't need any changes to that, right? And second, you said an announcement of some sort close by. What sort in the EV arena?
Good morning, Prashant. So when I say EV agnostic, what I essentially mean is that with the EV vehicles, our products do not get extinct. Of course, there is a technology curve. There is a technology transformation. I cannot just say the same product would fit on an ICE engine as well as an EV vehicle. So there will be a technology curve, but most of them do have an opportunity to make it to the EV space as well. In terms of EV critical, those are, let's say the motor controllers, the battery management system, components which do not go onto the ICE engine vehicles, only on the EV vehicles. The company is still evaluating. We want to be in that space for sure, but we also don't want to make a mistake of just getting into a space which will become very, very crowded. So we're still evaluating our options, and I would expect sometime later in FY23, we would probably roll out our plans and announce them to the market.
Okay, now we know why the stock has gone up 70% in 3 months, right? These are some really aggressive plans that you have, Anmol. 20 to 30% revenue growth in a challenging market like this. And I call it challenging because a large part of your revenues comes from the two-wheeler space, names like Bajaj, HMSI, etc. And these players have seen a slowdown, right? Especially in the mass market segment. Would that be a worry for you? And you have an enabling resolution to raise 400 crores as well. Do you plan to do that anytime soon?
Sonia, absolutely right. I think, we've been traditionally a two-wheeler company, but I'm happy that two-wheeler is now only 40% of the pie. We have almost 25 to 30%, which is the passenger vehicles, as well as aftermarket, which is very strong for us, which is almost 20%. We're very bullish on the aftermarket, and that's something which we usually garner a much higher margin on. So I think going forward, as I mentioned, the order book itself, almost 50% of our order book is for the passenger car space. So our dependability on two-wheeler is definitely reducing. Not to say that we are losing any market share or wallet share in that space. We're very strong with Bajaj and HMSI for the products we supply. And in fact, we have only increased our wallet share in the last fiscal as well. The other question you talked about was on the EV space, right?
No, the 400 crores enabling resolution that you have, will you be looking to raise funds anytime soon?
So it's an enabling resolution. We do not have any concrete plans yet to raise those funds in FY23. But I always say, we're always looking out for opportunities, inorganic opportunities to, raise capital and see how can we fast track this growth rate. I think 20 to 30% growth is something which we will do organically. But if there are any other opportunities, we'll definitely evaluate them. So it's an enabling resolution, nothing more.
All right, Anmol, very quickly before we wrap up, you're doing 400 crores per quarter. With the current investments that you've made, what is the peak revenue that Lumax Auto can achieve, since you're talking about big growth from here on? Peak levels, potential.
So Nigel, very quickly, I think our gross block to sales ratio has traditionally been around 2.2 to 2.5. It's very difficult for me to give you a number because, based on the diversity of our product lines, diversity of our customer portfolio, as well as capacities, it's very difficult to determine what are the capacity utilizations and what is the kind of revenue each of the product line can do. It's very, very diverse. But I would say that without any significant capex, just some brownfield or capacity enhancements, we should be able to easily look at, close to, give or take 1,800 crores, which is our this year number. But aftermarket, as I said, does not really need any capex, significant capex, but is always a very strong growth driver for the company.
Okay, well, all the best. You've done exceptionally well so far and hope this turns out to be a strong year for you.